And I'm just going to go through, I mean, I sort of did my macro look yesterday morning, so no need to repeat that. I'm going to go through the companies that are here. I mean, there's certainly some companies here that I didn't know, and I've learned a lot about them this weekend, and that's been really interesting. The benefit of this show, of course, being you get picks from all of the newsletter writers, and so we all have different specializations, different networks, so we come across different opportunities. So it's been great for me to see some of the opportunities out there that I wasn't aware of. And I'm just going to go through the picks that are here that are in my portfolio, that are in the Maven portfolio. Of course, you've heard from all but 3 of them. The 3 that are up here are the ones that you have not yet heard from. So you've already heard these stories, but I think sometimes my version of a story can be a little different, and partly because the guys who are the management teams who are responsible for trying to tell their stories are so keen to tell you every bit of information, because it's all important to them, and that matters. But I'm a storyteller. I do a valuation assessment, I see an opportunity, but then I'm a storyteller. So I think I can sometimes have a little bit of a different take on what grabs me about each story. So that's just what I wanted to convey quickly about the companies that are here that I own. As it turns out, there's 13 of them here that I own, so they're going to be brief recaps, because otherwise I would be up here for quite a while. So I'm just doing them in categories. So early explorers, advanced explorers, developers, and then other opportunities. And they're just in alphabetical order in each category, so there's no favorites being played here. So Atomera, you heard from them, I think, just in the last session. Of course, they've got this prospective land package in Washington, which is an interesting place to operate. Seems unusual, but it's actually very easy to operate year-round, and not a lot of competition in terms of mineral tenure. Of course, the linchpin here is that there's this mill that Kinross is running that's running out of ore. Kinross would love to continue operating that mill if they can have more to put into it. What Atomera, the story to me, is a systematic approach to finding that ore. And that means not just shoving drills into the ground because that's maybe what the market wants you to do, but instead being very systematic about the process. So they've spent this year really adding to their land package based on a regional look at soil sampling, at different geologic models for this area that has actually seen a lot of historic drilling, but then got kind of forgotten for various reasons. Using that novel geophysical technique that Mark was talking about in his presentation, and using, right now, one of the things that they're doing is using soil samples to identify structures that'll feed mineralization up from lenses that are at depth, which are otherwise difficult to find. So systematic approach to exploration in an area that's easy to operate, and the market just has to be patient. Drilling will come, and it's very prospective. The high grades that have been mined there previously are enticing for sure. Ashanti we heard from probably seems like ages ago because it was yesterday morning. This is as much as anything, this is a follow the people play. So Tom McCutcheon is the president and CEO of Ashanti. He was not here. He couldn't be here this weekend, so Paul was here instead. But the idea here is to assemble a portfolio of prospective West African assets. The key to that plan is that if you know the right people, you can find assets that have been somewhat forgotten. So the best example in the context of the Ashanti story is that when Kinross bought Redback Mining in 2009, whatever it was, for an exorbitant amount of money, they bought it for one asset that Redback had, which is now the Tasiast mine. There were a bunch of other assets in Redback Mining that were really interesting, but those assets get forgotten in that kind of transaction. The geologists who worked on those assets, however, do not forget, because they remember how excited they were about those assets that then have been sitting dusty on a Kinross shelf for the last 7 years. Tim is the type of guy who, through his connections, through his network, through his experience, was able to acquire those assets. Not just anyone even knew they existed, let alone would have been able to acquire them on very good terms, and now he's got this really interesting portfolio of West African assets to explore. So as much follow the people as anything, and Tim is the person there that I'm following. Also, team that knows how to operate where they're operating, and a very tight share structure definitely benefits to a story. Black Sea Copper and Gold. This is a team that starting back sort of at the beginning, when the bear market was only just getting established, looked around and said, where can we find new opportunity? that makes sense. So it has to be a workable jurisdiction. And where they found it was in Eastern Europe. So they found specifically in Bulgaria and Serbia are the sort of less explored, or are the main foci of their portfolio. And then a little bit lesser so in Romania and Turkey. They found areas that were underexplored, secure mining tenure, supportive of mining, and predominantly, like I say, very underexplored. So this isn't a, hey, the bull market's on, let's go grab some land and like throw our hat into the ring and hope people can give us money. This is, they've spent the last 4 years looking regionally, homing in on targets, and then coming up with assets that have specific signs of interest right on the targets, but within a big picture context, which are these large metallogenic belts in Eastern Europe that are attracting a lot of attention because of good discoveries of late. So that to me is the Black Sea story. It's been a long time coming, and they only just debuted on the market because the market was open to it as of recently. Also, another tight share structure. Northern Shield, also talked yesterday. You might remember them as the not gold story of the show. There's one more to come, don't worry. So this is Ian Bliss and his geologist, Christine, who looked at the Labrador Trough, which is a large area geologically. It had always been mapped as one homogeneous unit, one type of gabbro through this huge belt. They went and did a regional program and identified that there's actually 2 types of gabbro in the Labrador Trough. One of them is dominant and is not prospective. The other one occurs in a few places and is prospective for this kind of massive sulfide mineralization that they're looking for, which is specifically these giant nickel, copper, PGE deposits. So with that regional look, identifying those gabbro units, they were able to stake those areas and then go in and with only a few days of groundwork, show up enough evidence that they were correct that South 32 came in and joint ventured a project that had literally seen 5 days of work. That's very unusual, and it shows how encouraging the evidence is that they're onto something here. What you have to remember with a story like this is it's very difficult for the first drills to work, right? Early stage exploration takes some time. So the first round of drilling was interesting at Huckleberry. It hasn't hit into the home run yet, but it's interesting. So stay tuned there. South 32 is staying tuned, and that should be a leading indicator for you. Their Sequoia target, though, drilling starting soon, and that is a bit more of a binary target. They poke a hole into these anomalies, and either it's there or it isn't. And if it's there, the market will get very excited because this kind of deposit, Canadian metal investors have made a lot of money on this kind of deposit before, so the interest will ramp up very quickly if it exists. And then we've got Playfair, who you're about to hear from in this session. This is, if you know Dalradian Resources, so they own the Currano gold deposit in Northern Ireland. It's a very good gold deposit. It's high grade. They're about to finish their feasibility study. The market is in love with it. The geologists at Playfair, very experienced group, wanted a high grade gold opportunity in a workable jurisdiction. What they did was, and they had some experience in this part of the world, they realized that the belt of rocks that hosts Currano gets covered by another kind of rocks for miles and miles, and then it pokes out again in Ireland, specifically in this area called the Ox Mountains. And not only does it poke out there, it is the same major geologic structure that cuts through Currano, cuts through that part where the Dalradian rocks come through as well. So you have the same setting that you did up at this great gold deposit. So then they went out and they've spent 3 years prospecting and proving up the potential for there to be gold there. They found some great grab samples on surface, and the first drill program is underway there right now. They've reported that they hit structure, which is what you want. Assays are still pending. But as an early stage speculative story, I really like the regional look, the type of rocks, the setting, the fact that it looks exactly like a deposit that the market is in love with right now. If it works, again, it'll work very well. Okay, so moving on to the more advanced exploration stories, I think the first presentation of the conference was from Oren, so yes, a long time ago. You probably hardly remember what they said. I introduced Ivan from Oren by saying that Oren, to me, represents sort of a diversified mining or exploration speculation portfolio in one company, because between Committee Bay, which is a huge greenstone belt in Nunavut, Homestake, which is a 1 million ounce high-grade gold deposit in northern BC, and their portfolio in Peru, which is earlier stage, but has some very good evidence of both, high-grade gold mineralization and porphyry opportunities. They have something like 14 targets that they're planning on drilling next year. So that is diversification against exploration risk in one company, right? Because they're not going to hit at every target on Committee Bay, absolutely. But out of 7, they could well have success on some, especially because Oren's technical team is one of the best in the industry. They're an incredibly good technical team. So that's a cool one to add to your portfolio for, like I say, sort of a diversified exploration speculation just in one stock. And they do have a fairly tight share structure still, only 67 million shares out. Moving on to Cordoba. Cordoba in Colombia, I'm actually flying to Colombia tonight, and I will be visiting Cordoba's project on Wednesday, I think it is. So I've been interested in the asset for a while, haven't had a chance to get my feet on the ground, but that's coming. This is a big multi-target land package at the north end of a really prospective belt in Colombia. The north end was a little bit explored of late, so Cordoba was able to take advantage of sort of a first mover situation and stake a lot of ground in what's a really mining friendly area. There's operating mines right near there, nickel and coal mines right near them. There's already a skarn with a historic resource there, so that's why it's a bit more of an advanced play. There's already some known mineralization. But the real thing with Cordoba to remember is this partnership with HPX. Basically, Cordoba represents a low-cost exposure to one of Robert Friedland's next current exploration plays, right? So HPX brings technology and expertise and cash to exploring this big land package, and the earn-in deal is very important here. The earn-in deal, HPX has already earned their 51% by spending more than $17 million. That's a significant chunk already. Now to get up to 65%, they have to take one of the targets all the way through to feasibility. So it's an unlimited amount in terms of a cash commitment to get their next 65%. So Cordoba has a really good deal here. The value just continues to grow. Eventually, maybe HPX takes them out, who knows? But either way, between HPX's stake in Cordoba and their growing stake in the property, Cordoba gives you that exposure to what Robert Friedland is excited about in Colombia. Nighthawk. So Nighthawk is the one that's north of Yellowknife, okay? So we've gone up in northern Canada. I described this as new eyes on what was sort of a forgotten asset. Perhaps almost actively forgotten. The Collimac mine was a failure, so when mines fail, people actively try to forget that they happened. But not everyone. So Dr. Mike Byron realized that the mine that was built too big and too soon before they understood the resource, and he went back and started digging through what opportunity might yet exist there. And basically now, that picture on the bottom, the red stuff shows the defined resource, and there's so much opportunity within those pods of the resource. And by exploring those opportunity, they're pulling intercepts like, what do I have there? 52 meters of 7.7 grams. Like there's a lot of high-grade opportunity within what's defined as sort of a 2 gram, maybe a bit less, per ton resource. So the market is going to really like seeing this already 2 million ounce resource increase in grade and probably size, but increase in grade as these high-grade shoots become incorporated into the resource. And Kinross clearly believes in that potential. They just put $10 million into the company to take a bit more than a 9% stake. Moving on to the developers that are out there. There's 3 stocks out there that I put in the developers category. The first is Atlantic Gold. I visited these guys in the beginning of October over in Nova Scotia, just pretty close to Halifax actually. They're building a mine. So not a lot of companies out there actively building right now if they're not already sort of operators. So new operator up and coming. In 10 months, they'll start producing at a rate of 90,000 ounces a year. There's real potential to boost that 90,000 ounces considerably, double it perhaps by incorporating other deposits that are already defined but just need a little bit more work to incorporate and permitting to incorporate into the mine plan. One of the things that I really like about Atlantic that I took away specifically from going on that site visit is this team. It's a really good team. They're very strong operators. And what that means, what that has come to mean is that they have they have real focus on managing risk. Stephen Dean is the first to tell you that mining is really risky. Mines don't, there's CapEx overruns, there's mistakes in resource estimates. Mining is a risky business, so they're really focused on mitigating or managing that risk. The fixed price contract is an important part of that. Their facility is getting built for $87 million. If it costs more to build their facility, the contractor pays the overage, not Atlantic. So shareholders are protected from that, and that was the way they designed it. They're drilling their resource, the first 4 benches of their open pit resource, they're drilling on 10-meter centers so that every blast that's done, usually you drill holes to blast a face in an open pit. The cuttings from those holes, you take a sample, you rush it to the assay lab, and you hope you get the results in time to know whether that blast should go to the mill or to the waste rock pile. They're drilling it ahead of time so that each truck with a GPS tracker will know before it even picks up the scoop whether that goes to the mill or to the waste pile. Things like that really matter in terms of managing the risks that are really inherent in a mining operation. So, very cool story over in Atlantic Canada. Integra Gold. Over in Quebec, I mean, they're getting ready to build a mine beside a city that's named after gold. So you can't be in a better jurisdiction in terms of a support for mining, and a bunch of people who are experienced underground miners and want jobs. That makes a difference, right? So their labor pool is a real benefit. This is immense drilling over the last 18 months. They're the busiest junior explorer in the world, perhaps. I mean, they're drilling like you wouldn't believe. And that drilling has resulted in a dramatic transformation in their resource. The Triangle deposit went from something that was going to be a little bit more difficult to mine because it was going to have to be sort of a bulk operation to something that's defined by clear, steeply dipping, high-grade chutes that can be mined easily and efficiently. And then the acquisition of the Lamaque mill is just key to this story. The downturn meant that they could buy a fully permitted, ready-to-operate, modernized mill that's next door to their deposit. They bought it for about $7 million during the downturn. It would have cost, 20 times that to build that mill, right? So that acquisition means that their CapEx and timeline to production are just dramatically reduced, and therefore their returns should be very good once this project gets into operation. So that's a good developer to look at. And then Maritime. You haven't heard from Maritime yet. Doug's sitting up here and we'll tell you that story shortly. Maritime is over in Atlantic Canada again. They're in Newfoundland. They're also looking to build a mine. This is an underground mine. So there's a historic underground mine. Their resource wraps around a bunch of historic underground workings, so that in itself is a benefit. They're also not planning on building a mill. There's a mill in the area where they have committed the right to be able to use that mill. So again, this is a short timeline to production and a reduced CapEx to production. And those things mean that the return, if this mine gets into production, should be very strong. Now, the pre-feasibility is about to come out, so Doug won't really be able to talk about all of the numbers because they're not official yet, but they look really good. And it's also a nice tight share structure, which always helps for the for the investor. Then there's 2 other stocks that I own here that don't fit into any of those particular categories. One of them is Ely Gold, Ely Gold and Minerals, I think, if you want the full name. The state of Nevada is a maze when it comes to claims, right? There's like this, ever since the Carlin Trend was discovered, everybody has been trying to work in Nevada. So there's like a maze of claims, and you have to make sure your claims are kept in good standing, and you have to find claim owners who have left or forgotten that they own their claims, or that claims have been sold who knows how many times. And then royalties on some of those claims have been either forgotten about or difficult to track down. But if you can see through those complications, there are opportunities, and that's Ely's whole business plan. There's one guy there, Jerry, who's made it his sort of life's work to figure out Nevada's maze of opportunities. And so by understanding claims that are not in good standing, by understanding slivers of property that are slivers of ground that are between properties, by identifying royalties that have been forgotten about, Ely is able to get a hold of opportunity, and then they basically get a little opportunity. They figure out how to grow that opportunity, either by digging up the historic data and making sense of it, by making good deals to trade for adjacent land, by digging up old owners who have gone missing. They grow it into a saleable asset. So it's usually a low-cost entry to stake a little ground, do some data swaps or property swaps to grow that little sliver into something bigger, and then they sell it for cash to continue operating and hold on to a royalty should it turn into something. So it's a unique business plan that takes advantage of an opportunity that's only available because of Jerry's level of knowledge and intimacy with Nevada. So it's a cool one. It's an organic royalty growth opportunity in Nevada. And then finally, Select Sands is the company that we're just about to hear from. This one's totally different. We're going to talk about high-grade silica sand. I know, you're all really excited about silica sand. But you should be, because fracking, people understand that fracking is you shove a bunch of sand down a well to hold open the cracks that you've made in the earth so that oil and gas can flow out of those cracks. What you may not realize is that the amount of sand that's being shoved down these wells has increased dramatically over the last few years because they keep finding that the more sand they put down there, the better the flow rates get, over and over and over. And not just any sand, it has to be very high quality sand. It has to be clean, it has to be very uniform in size, and it has to be round, because you can imagine that dirty, coarse, and multi-size sand would actually clog the cracks instead of holding them open. And interestingly, there's very little supply of high-quality silica sand near America's frack basins, except Sandtown, which is Select Sand's asset, has precisely that. So I'm going to leave it right there and let Razul come up and tell you the rest of that story.